Hello and welcome. You're watching The Money Show and I'm Kavita Thaplia. This is the only show where we answer all your portfolio-related queries and we also help you formulate your strategies for your financial goal. Just in case you are wondering how to reach out or you want any guidance from our expert, you can send across your questions on our WhatsApp number and email ID that's flashing on the screen, and we will get your life financial planning done on the show by our experts. And today we have with us Pankaj Mathpal, who will be answering your portfolio queries and would also be talking about different investment strategy that's aligned with your financial goals. Pankaj, hi, good evening and welcome to the show. And let's begin with our viewer queries. Sushil Desai's question we will take, Pankaj, and he says that he has Bandhan small cap, Motilal Oswal mid cap, HDFC flexi cap, ICICI Pru Bharat 22, which is a large cap, Nippon India multi cap, and he wants you to review his existing portfolio. Current value is 63,000. So he is doing SIP of 3,000 each in all of these funds, and I am not sure for how long he wants to stay invested, but assuming that it is 5+ years, how are these funds? And again, how much would he able to accumulate if he's investing this same amount for maybe 5+ years?
Kavita, good evening, and thank you very much for having me on the show. See, he has investment across large cap, mid cap, small cap, directly or through multi cap funds. So his portfolio is good. All the schemes within the category also means good. So no need of any change at this moment. He can continue his SIP in these all schemes. And as you mentioned that he had not clarified that for how long he wants to stay invested, but because he has invested in equity fund, we can assume that his horizon is long term. So with 63,000 rupees what he's accumulated by now and 15,000 rupees SIP across 5 funds, he can expect around 36 lakh rupees in 10 years. But if he steps up his portfolio by 10% every year, his SIPs, in that case, he can expect 51 lakh. Similarly, if I calculate for 15 years, he can expect around 75 lakh with his current SIP plan. But if he steps up it by 10% every year, he can expect 1 crore 28 lakh. It means if he follow this step up method, the difference is quite huge. So my suggestion to Sushil that he should definitely consider step up by at least 10% every year so that he can accumulate a bigger amount.
All right. See, it's very important for our viewers also to send us questions in detail, because what is happening is over here we are definitely recommending the right kind of portfolio. But then for how many years are you planning to invest? What's a particular goal that's aligned to this portfolio? Because wealth creation, that definitely can be a goal for you. But then if you have any short-term or near-term goals, it's very important to align your strategies with that particular goal. And that, in fact, gives you the right kind of investment instruments, and it also helps you invest the right amount. So maybe all those details were missing, but as per your suggestion, the portfolio is very well diversified. He needs to add any fund later on if at all he is planning to step up his SIP, which also you have recommended, maybe if he wants to accumulate a certain amount.
See, as far as equity is concerned, he has very good portfolio. But yes, for diversification, I suggest that he could have one multi-asset allocation fund, which will give him allocation across equity, means debt and gold, also along with equity. That can be a choice. Further, he can consider adding one value or contra fund to his portfolio. So if he wants to increase SIP, so one multi-asset allocation fund like ICICI Prudential multi-asset allocation fund or White Oak Capital multi-asset allocation fund can be a good choice. And as I mentioned, contra fund, so SBI contra fund or Invesco contra fund can be a choice for addition of one scheme.
So Pankaj, now the details are missing, okay, and we also are not sure of his risk profile or his age. Now, considering he's someone who's maybe a senior citizen, not comfortable with equity, would you still recommend the same kind of funds if it's a 5 years time horizon?
Not at all. See, this is a very important question because when we do not know, we assume
which is
somebody
why we
investing
need all the
equity means for
portfolio
long term.
details. Absolutely, absolutely, yes, sir. Yeah.
So yes, see, first thing, if he is senior citizen, then definitely he should consider less aggression in the portfolio. In that case, means like small cap, definitely he should avoid. He has Bandhan small cap fund, Nippon India multi cap fund that can also be avoided. Yes, HDFC flexi cap fund, ICICI Prudential Bharat 22 fund that can stay in the portfolio. So if your horizon is less, if you are young even, for example, the Sushil is young, but his horizon is say 2-3 years, in that case also small cap, mid cap, he can skip and more allocation can be in large cap and flexi cap fund along with multi-asset allocation and other hybrid funds. See, second thing, if you are senior citizen, in that case also maybe your horizon is longer also, but because you may need liquidity, you may not, may want to avoid volatility. In that case also, you should consider only flexi cap with larger allocation to large cap and hybrid funds like multi-asset allocation and balanced advantage fund should be in the portfolio.
All right. So if you're a senior citizen, if you're someone who's very risk averse, maybe you need to go slightly more hybrid or reduce the amount of equity exposure that you already have. But just in case, if you are someone with good enough risk appetite, you have the funds which are perfectly fine. And if at all you want to add more, Pankaj has recommended funds whenever you're planning to step up your SIP. But just in case you want to know how much you would be able to accumulate. So currently your investment portfolio is of 63,000. SIP of 15,000 per month. You can expect 36 lakh, as Pankaj also explained. If you're stepping it up by 10%, 51 lakh. And without step up for 15 years, 75 lakhs. If you're stepping it up, then 1.28 crore is what the figure Pankaj has estimated for you. Pankaj, let's move on and let's take Balaji's question. He says that he's 54 years old. From Chennai, a retail investor in process of wealth accumulation to generate a retirement corpus of 5 CR in next 5 to 7 years. That's a time horizon he set for himself. So first of all, congratulations, sir. I think you have really identified the right things. You are a retail investor in process of wealth accumulation. That's very good to know. And the portfolio details that you have sent us, you have a couple of questions on your portfolio. So you have invested 95 lakhs in active funds and 16.5 lakh in sectoral funds, and currently you have stopped all investments. Parag Parikh Flexi Cap and UTI Nifty 50 are the only one in which your investment is ongoing. Okay, so your question is currently you can invest 1 lakh per month for next 2 years, which is around 25 lakh. And you also want to know which fund category should you continue for next 2 years, from which funds he should quit and take his portfolio, make it maybe more simple and less risky. I really wish we had you on the phone line because a lot of clarity needed. But having said that, we don't have his funds, right? Okay, we do have his funds. We have he has 9 funds. He's got Parag Parikh Flexi Cap, UTI Nifty 50, Mira Asset Mid Cap, Quant Flexi Cap, Quant Small Cap, Nippon India Mid 150 Index. So active are 6 funds. Sectoral is DSP, Finance, Quant Momentum, Quant Manufacturing. These are the 3 sectoral funds that he has in the portfolio. Quite a risk taker, Mr. Balaji, that's all we can say. But yes, let's help you consolidate this portfolio and maybe make it less risky. Pankaj, what would you recommend? Because he just wants to continue investment for more 2 years now. So time to shift his equity portfolio into maybe more hybrid or conservative side?
Agreed with you, Kavita. And as you said that he looks like a risk taker, but we don't know. He's a risk taker or by mistake he has
Yeah, that
included
also could be possible.
portfolio.
True. Yeah.
Second thing, Kavita, he said that he has active and thematic, but actually these are diversified and thematic. In diversified, if you see, he has also passive fund. So what he is referring active fund, these are basically diversified, active as well as passive fund, because UTI Nifty 50 index fund is a passive fund and others are thematic funds. So he has a mix of active, passive and thematic and diversified. But the most important thing, what he's accumulated by now, this 1 crore 11 lakh 50,000 rupees, and SIP, what he says that in two schemes already SIP is going, but I don't know how much the amount of SIP in those two schemes, Parag Parikh Flexi Cap Fund and UTI Nifty 50 Index Fund. But 1 lakh rupees additional SIP he's ready to start, but that is only for 2 years. So considering this, that he will invest only for 2 years and he can stay invested for next 5 to 7 years, if I calculate this at 12% CAGR, he can expect around 3 crore rupees. But his target is 5 crore, so he is far away from his goal. My suggestion that either he should increase the SIP amount right now, or this lump sum also he should top up, or otherwise he should step up. But step up also in 5 to 7 years will not help that much that he can really accumulate 5 crore rupees, where we are calculating only around 3 crore rupees. So that he has to see that how he can accumulate. Otherwise, it will take, say, around 9 years, 8 to 9 years to accumulate 5 crore rupees, not in 7 years. Second thing regarding the portfolio, I suggest that immediately he should exit Quant Momentum Fund and Quant Manufacturing Fund. These two sectoral fund he should exit, and in his existing SIP like Parag Parikh Flexi Cap Fund and UTI Nifty 50 Index Fund, he can top up. Along with that, one additional scheme I would suggest him, that will be ICICI Prudential Multi-Asset Fund. So one addition to scheme I'm suggesting that he should exit from, and he should increase his SIP amount in existing two schemes, Parag Parikh Flexi Cap and UTI Nifty 50 Index Fund. Yes, Kavita.
All right, so definitely a lot of shifting that needs to be done, and looking at the criteria based on which you are investing, you cannot take a lot of risk, but you definitely need to step it up. You know, if the goal, which is very aggressive right now, looking at the amount that you want to invest, so definitely 1 lakh per month you have to do. But if it's comfortable, you might just want to step it up more. Pankaj, let's take Sridhar's question. So he intends to receive an annual income of 3 lakhs with a lump sum investment of 30 lakhs. Okay, so for that he needs an investment strategy, I guess. Okay, that's the only question that I have. I mean, it's just a two-liner. That is what he's given us. Okay, Pankaj, do you have the question? Yes. Sridhar's question.
Yes, Kavita. See, important point here, which we don't know, whether he wants to invest now and start SWP
or immediately invested,
or he wants to invest this 30 lakh rupees now and stay invested for long term, and then he wants to withdraw. So assuming that he wants to invest this 30 lakh now and expecting 3 lakh rupees every year, it means he's expecting 10% returns from his investment, and we know there is no guarantee that you will get any fixed percentage every year. So in general, what we recommend, that you should withdraw 0.5% every month, or say 6% every year. So if you withdraw 6% and your portfolio grows by 10%, 12%, it means there are two things. One, that you will be comfortably withdrawing the amount what you are planning. Second thing, with time, you can increase your withdrawals. So for example, if you are withdrawing right now 3 lakh rupees, and we know that with time, because of inflation, the requirement will grow, and year after year you can start withdrawing higher amount. So here my suggestion that do not withdraw 3 lakh rupees against 30 lakh immediately. If you invest now, wait for few years, let the money grow, and then withdraw 3 lakh, that will be a good thing. Otherwise, right now, withdraw, say, at the rate of, as I said, 6%. So 1,80,000 rupees every year instead of this 3 lakh rupees every year. That is my suggestion. And some scheme I'm suggesting, considering that you want to withdraw immediately or after 1 year, 2 years. So some hybrid scheme I'll recommend. One is ICICI Prudential Balance Advantage Fund. Another will be HDFC Balance Advantage Fund. These two are balance advantage, but both have different strategy in the fund management. So both schemes can be in the portfolio. Along with that, one multi-asset allocation fund, that will be White Oak Capital Multi-Asset Allocation Fund. So in these three schemes, 10 lakh in each, you can park your money and then you can withdraw. But as I suggested, stay invested for some time and then plan the SWP. Yes, Kavita.
All right. So hybrid is a recommendation also because we don't have a lot of clarity. To be on the safer side, this is a recommendation. This can be
Yes.
case specific, and this might really change if at all we had more details and more clarity on what exactly you need help for. But assuming, I mean, we've also assumed different scenarios, and thanks to you, Pankaj, for doing that. Recommended schemes are Balance Advantage from ICICI Pru, White Oak Capital Multi-Asset, and HDFC BAF is what is recommended. If in case you need more clarity, do send across your question with all complete details. Okay, let's move on. And Pankaj, let's take other question. This is the longer one. This is from Mr. B. Ranajit. Okay, a longer question. I'll just read it out to you and you can check if you have. So he has divided his portfolio into various fund category. In large cap, he's got 3: SBI large cap, ICICI Pru, and Canara Robeco large cap. Mid cap funds, he's got PGI mid cap opportunity, Motilal Oswal mid cap, flexi cap, he's got 3: Parag Parikh flexi cap, Helios flexi cap, and HDFC flexi cap. And okay, there's a lump sum he's done in HDFC flexi cap. Bank of India flexi cap also he's invested, but then he's stopped doing his SIP due to performance issues, but he's not withdrawn the amount. And in small cap, he's got Quant small cap, Nippon India small cap, and Kotak small cap, again doing SIP in these funds. Thematic, he's got Quant infrastructure, HDFC manufacturing. Here also he's doing SIP. So total value is 30 lakhs. SIP amount is almost 1 lakh per month, and he will make 10% step up every year. The target is 2.5 CR in 5 years, and he needs to know if any changes are needed looking at his target and the time frame. And is it even possible for him to achieve his target with this kind of investment amount? So very interesting, and I really appreciate the way you have accumulated funds, every market cap fund you have, and best performing, I would say. But do we really need so many funds? That's also a question, Pankaj.
Yes, Kavita, I agree with you because he has multiple categories.
Yeah.
And within each category, he has 3 funds. So 3 small cap, 3 mid cap, 3 large cap.
Yeah.
And I think this is not a good strategy. See, you should have multiple categories like large cap, mid cap, small cap. You can have flexi cap, multi cap also. But one fund in each category will suffice the need. So definitely you should consider consolidating your portfolio. But right now, from this existing portfolio, at least 2 schemes. One will be your, you have because this thematic fund. So Quant Infrastructure Fund, I'll suggest that you should exit this scheme. And another thematic fund also you have, that is HDFC Manufacturing Fund. So both thematic fund you should exit, at least cancel your SIP in these schemes because you're planning for long term. And you should start SIP in HDFC Flexi Cap Fund because you have lump sum in that, but you have stopped SIP. You start SIP now. That is what I'm suggesting you. So 2 schemes you should cancel SIP, and 1 you have to start in. And as far target is concerned, see, if you calculate at 12% CAGR in 5 years, what you can expect is around 1.5 CR. And target is 2 crore, 2.5 CR. So there is a gap. If you increase your SIP amount right now by 50,000 per month and 10% step up as you're planning, then you can achieve your target. Otherwise, it will take around 6.5 years to accumulate the amount you are expecting.
All right. So you need to really cut short your portfolio and filter out a certain amount of funds. And so you can consolidate your portfolio because you have a lot of schemes, and the recommendation has been given to you by Pankaj. Just in case you missed anything, you can watch this show on our YouTube because we do upload all our shows on our YouTube channel. But let's take Vishesh Malhotra's question, Pankaj. He's writing this question from Delhi, and he wants to invest in both the mutual funds and ETF. So he wants to understand whether how to invest in Nifty 500 is what his question, and what route will be good for him, a mutual fund or an ETF. So, okay, a lot of clarity, I think, is needed on the understanding of what is a mutual fund and what is an ETF. Pankaj, let's begin with that.
See, whether it's a mutual fund or a ETF, both are pool product where multiple investors invest and you have a diversified portfolio. So when we talk about Nifty 500 ETF, it means there are top 500 companies, which will include large cap, the top 100 large cap, then next 150 mid cap, and also small cap. So it's a well diversified across different segments. Now, whether one should invest in mutual fund or in ETF, see, both have their merits and demerits, I'll say, but both are equally good. See, when you want to start SIP or want to invest through SIP route, then definitely mutual fund is a better choice, because in mutual fund when you invest, you get the part of unit as well. Miss, if you are investing 5,000 rupees every month, so the fraction of unit also you can get. But when you invest in ETF, at least one full unit you have to buy. So it means for SIP, mutual fund is a better choice, but lump sum you want to invest, in that case, you can consider ETF as well. And as far as expense is concerned, expense on ETF will be lesser than the mutual fund. So that is also another reason to make your choice. So both can be considered, but how you invest in ETF, there is another question. For ETF, you have to have Demat account, either with the NSDL or CDSL. And second thing is your trading account, which you open with broker. When you open your trading account, along with that only a broker will open a Demat account for you. So trading account plus Demat account you have to have. And then as we buy shares during market hours at a real time basis, similarly ETF can be purchased and sold. So if you want to buy ETF, you have to decide that how much units, how much ETF you want to buy, how much money you want to invest, and then you have to place your order, and accordingly you will buy it. Then you hold it. When you want to sell it through broker, whether online or offline, you can sell it. So for buying, selling both, you will have to take the help of your broker. But in mutual fund, you can invest directly or regular plan through your distributors. That is another choice. So that is the answer, that you can invest in both. And yes, for Nifty 500, the scheme is Motilal Oswal Nifty 500 ETF. Other schemes are like momentum or other factor. But if you want a pure vanilla Nifty 500, Motilal Oswal Nifty 500 ETF is for you.
All right. So, a lot of it actually depends the way you want to set up your strategy, the kind of risk appetite you have. ETF definitely is a trend these days, Pankaj, but you really cannot compare it with active investing. Okay.
Exactly.
There is an ongoing debate between active and passive. I would say that you can have a combination of both in your portfolio. Maybe for certain categories, you can have a passive strategy, have an index or an ETF route for that. But in certain cases, you still can go with an active one. The problem over here is a lot of active funds have not performed in the past, okay, which again, because it's market dependent. As per market phases, you will see the performance of those funds also, which is why right now a lot of people fund houses are also launching passives, not only the investors in getting interested in passive strategies. But having said that, what category active and what category passive?
Kavita, the comparison can be only Nifty 500 index fund versus Nifty 500 ETF. But yes, what you mentioned, active versus passive, there is no comparison, because first thing, that when you invest in active funds, fund managers not only try to generate alpha, but also try to control risk. In index fund or ETF, you know that this rebalancing is done on a 6 monthly basis. But in active funds, fund managers, if required, they can make changes whenever need arises. So that is why active funds are better in that case. Second thing, as you mentioned, that returns wise also, because performance wise also, the selection of stock is in the hand of the fund manager, and they try to generate alpha. So if you're comparing a multi-cap fund where you have large cap, mid cap, small cap, everything within the portfolio, and comparing with Nifty 500, where also you're getting allocation across the market segment, but still in active fund, there is potential to generate higher returns compared to your Nifty 500 index or Nifty 500 ETF. So that is why, yes, some portion of your portfolio can be in index fund or ETFs, but active funds must be there in your portfolio.
All right. I think, Pankaj, with that, it's a wrap. Thank you so much for being on the show and helping our viewers with their financial portfolio strategies. And for all viewers, I'm going to leave you with our WhatsApp number and email ID where you can send across your questions, and we will do your live financial planning on the show. That's it on The Money Show today. Thank you so much for watching. Goodbye.